Welcome to another real estate market update brought to you by Stunning Homes Realty. In this video, we're going to break down what's actually happening in the real estate market update. We're going to dive into the numbers so that you can be better informed when you're looking to buy or sell in this market. For the month of July, starting in August 1st, we have active listings 7,105. This is actually down 16% from 8,500 this time last year, but up almost 25% month over month from 5,700 last month. As far as under contract listings, these are all properties that are pending, contingent on sell or under contract accepting backup offers. We're 11,000 under contract versus 12,000 this time last year, so down 10% year over year, and down 3% from 11,400 last month. As far as total monthly sales, we're at 9,100 versus 10,500 this time last year, so we're down 13% in total sales year over year, and down 10% from 10,100 last month. Monthly average price per square foot is $250.93. That's up 31% from $191 this time last year, but down 0.5% from $252 last month. And we'll definitely talk about what that means. And the monthly median sales price finally hit $400,000. We've been wondering when that was going to happen. We were at $315,000 this time last year, so we're up 27% and up 0.8% from $397,000 last month. And remember, around this time last year, we hit $300,000 for the first time. We were wondering how long it can continue. Well, now we're at $400,000. Now, you heard me say earlier, 25% month over month an increase in listings. And that might sound like a lot, but you have to remember, it's 25% up from a smaller number of 5,700. And historically speaking, in the Phoenix market, we want to be about 30,000 listings. So we're still at 25% of what's a normal market. And all in all, we're still seeing a lot of articles where people are talking about the demand being exceptionally strong. And this can't be any further from the truth. The fact is, demand is really not that high. What's really driving the market is supply is still incredibly low. So you can see that from the pending and under contract going down. The fact that those numbers are going down are indicating that the demand is not necessarily high. If demand were strong, those numbers would continue to go up versus down. So a large majority of market commentators, they just not grasp the fact that demand is not really the issue. And interest rates aren't the issue either. So even after a rise of almost 25%, there's nowhere near enough supply to take off all the stress in the market today. So demand has changed. Its makeup since the start of the year. Owner occupiers are down. So people that are moving in, buying a house, moving in to live in it, that number is down, while secondary buyers are up. We're talking about out-of-state investors, iBuyers, fix and flip, hedge funds, and so on. So they're the ones that are filling the gap. And as a result, that's what's driving the demand up and the market up. And many buy-to-rent operators are even buying from each other. So the very first one that started in Phoenix in 2012 just sold the entire neighborhood to another buy and hold investor. You might be concerned, well, this is taking inventory from the market, when in reality, those were built to rent originally, and they were sold as a block to another investor. So this would be just like if someone were selling an apartment complex. So overall, the last year, prices have not been rising because of the strong demand or low interest rate, as often stated by the media. What's actually happening is that buyers are not paying as much as they can, but because interest rates are going down or have been lower, people could afford to bid more. So they weren't trying to pay more because they wanted to, they were paying more because they had to. So multiple bids were causing them to pay more. And right now, average over asking price is 1.4%, and that's down from 1.8% in June. So July was 1.4% over asking price, in June it was 1.8. And a lot of new home builders right now are currently experiencing elevated demand because so many buyers have given up trying to buy a resale home, a home that's been lived in, a home that's been on the MLS. So because of that, they're moving to the new builds community. So some of the new builds might think that there's demand for new homes. It's not so much as demand for new homes as buyers have given up on buying resale. And so another thing to look at is the listing success rate. So market has been cooling down for the last 4 months, and we can see that because in May, with the listing success rate was 93%, which means that for every 100 homes that was listed, 93% went under contract and closed. In July, it was 89%, which is still historically a high number. You know, anything over 80% is a high number, but 89% is still a high number, but is lower than 93% than it was in May. Earlier, we were talking about how the price went from $252 a square foot to $250 a square foot from June to July. And again, that might seem alarming, but what's really happening is a seasonality. Every year, the luxury market takes a cool down, right? It slows down in the summer when it gets really hot. A good chunk of luxury homes didn't sell because they were taken off the market. And as a result, the average dollars per square foot went down. But as you can see, the median price went up, which is an indicator that there's still a lot of upward pressure on pricing. And all in all, appreciation rate is tumbling down, right? So we saw that we were at over 30% last month. So the appreciation rate is tumbling quickly now that inventory is growing. So we saw that last year, year over year, we were up over 30%. We're gonna start seeing now year over year not increasing as much because we're starting to miss out on some of the strong appreciation we had around this time last year. So don't expect that we're gonna continue to see 30% appreciation year over year. We just had a momentary peak and that's not gonna be as crazy the rest of the year. Now looking at the Cromford Market Index, you can see that beginning of the year, we were over 400. We peaked at over 500 in February and we've been kind of going down. So last month was the first month where we went under 400 and we're about 350 right now. And what that means is around February, we had about 5 buyers for every 1 seller. Now around 350, we have about 3.5 buyers for every seller. And so again, historically speaking, Cromford Market Index, anything over 100 means it's a seller's market, anything under 100 is a buyer's market. It might seem like the market's slowing down. We hear a lot of people saying the market's slowing down, when in reality, we went from what was a 500-degree weather to 350-degree weather. No matter what, it's still freaking hot. So what does this all mean for you guys? It's tough out there still. If you're a homeowner and you want to sell your house, you can still price it aggressively, but not quite as aggressively as you could before because not as many people are waiving inspections or waiving appraisal so much. If you're a buyer, you can see we're still paying on average 1.4% over asking price. You're still gonna have to pay over asking price. If you have a realtor to help you, you have someone that's full-time professional that understands this market, has been doing it for a while, that's awesome. If you don't have one, Steve Trang, Stunning Homes Realty, we've got a bunch of realtors. We'd be honored to serve you, help you navigate this very interesting market.